right. Okay, welcome back, guys, to another week here with WPAT. Sorry for the delay. All right, we seem to have a bit of a technical difficulty today. So I just am waiting for the MT4 and everything to go online. All right. Perfect. Okay. So let's quickly take a look at what we are going to be talking about today, okay? So here with WPAT, the no BS trading. All right. So first off, before we start, we do want to inform everyone that we are talking about Forex trading. Now, Forex trading is traded on margin, therefore it may not be suitable for everyone, okay? Now, what we're doing here with no BS trading is to make sure that we can actually quickly jump ahead into the trading stuff rather than all of the, nitty-gritty mentality things, okay? The mentality stuff, you guys can all learn it by yourselves. The more you try it on your demo accounts and then slowly testing it on some real accounts, you guys will actually get to learn to get to grips with your emotions. All right, so today we're going to jump in with a brand new trading strategy here to showcase on WPAT's No BS Trading. So get ready, guys. Get in front of your computer and follow along on how to set this indicator up. After we do everything of the new trading strategy today, then we will actually be reviewing the trades and our past strategies. Okay, so stick around. All right, well, first thing first, what you want to do is get a fresh chart. Go into any pair that you like. Okay, so for example, today I'm feeling Aussie dollar. All right, I'm going to get Aussie dollar out. Okay, once I get my Aussie dollar, okay, what you want to do is to actually put on two indicators, okay, or actually just one, but we're going to do two versions of it. Okay, go to the bands, or technically the bands are called Bollinger bands, okay? This is something a lot of people are familiar with. There's a lot of people who utilizes Bollinger bands to actually take a look at trend, okay? I'll explain a little bit more. Let's actually get on with it. First thing first, I like my charts cleared, so I will remove that grid. Then I'm going to slide my bands in, okay? Once you set a band, okay, go into the input section, okay? The bands are going to be preset to a value of 20. What that means is basically the bands will be calculated based on basically our high and low price, okay, basically of 20 periods in the past, okay? So it's going to be 20 periods in the past that it's going to average out to the current of now. So anyways, that's what you want to actually set it up at. And also the band variation, keep it at 2.0. Now click OK. Perfect. Now you're going to get a Bollinger band. We're not done yet, guys. Okay. Do the same thing. Slide a secondary Bollinger band in. Okay. But now what you want to change is change the deviation to 1. Okay. You want to change the deviation to 1. Now after, whoa, that's 11. That's not 1. Done. 1. And make sure you change the colors up a little bit just because it may be easier for you to read. Okay? All right. So, anyway, I will change everything to my magenta just because I like it. You guys can choose whatever color you guys want, okay? And then, okay, we're done. All right, so technically speaking, this is how your chart should look like. Okay, so today we're going to talk about a dual band trading strategy, okay? Actually, this is like a strategy within the strategy. So, guys, bear with me a little bit. I'm going to talk to you guys about what usually people do with Bollinger bands, okay? Okay, so Bollinger bands basically is mostly utilized for trend, okay, to track the trend and potentially the strength of the trend, okay? As we know, most of the times, more than 70% of the Forex market is actually very trendy. It's not stuck Okay, it's not always a parallel market. Most of the time it's very trendy. Either it goes up or it goes down. Okay, that's the whole idea behind the Forex market and why the Bollinger Bands exist. Okay, all right. So basically, what we want to do is we can actually utilize this to verify the trend right now. And then once we figure out the trend direction, we have a strategy in place for you guys to utilize. Okay, so first thing first, how do we notice a trend? Okay, so for example, take out the trend line. Okay, what you want to do, oh no, it's a bit laggy, isn't it? Done. Trend line. You see, if I could connect most of my low prices, okay, my low lows, okay, if my lower lows, my lows are getting higher, so the higher lows are getting higher, and then my tops are also getting higher, okay, you see, now this is basically an indication of a bullish trend, okay, so I've jotted out for you guys, this is called a bullish trend, okay, with this bullish trend here, then you will actually figure out the trend direction first, and then that's when we can zoom in and start taking a look at the Bollinger Bands strategy. Okay, so let's take a look at the history first, just because it will be easier for you guys to track. Now, what type of time frame will we usually be using for Bollinger Bands? Okay, I personally like the 1 hour. Okay, you could still use 4 hours, okay, and you could even use 1 day. But, by using the D1, you'll get a very good visual of the trend. But then the biggest problem is that you will not be trading technically intraday, okay? So if you want to make sure you can grasp as much profits within a short period of time without holding on for days, then maybe we should take a look at H1 or maybe 30 minutes. But for simplicity's sake and for more accuracy, let's stick with H1. Great. So the idea is very, very simple. Okay? This is Bollinger 1.0. Okay? Let's review very quick. Number one, set up a trend. Okay, figure out the trend direction. Now it's bullish. Great. So what do we do? Okay? We will actually utilize the top band. Okay? And utilize the top band only. Okay? You see, on a bullish trend, most of the time, we want to try to cash in on the trend itself. That's the whole idea by utilizing a trend setting indicator. Okay? So, let's quickly take a look. What you want to do is when the price, okay, when the price, meaning the candlesticks, okay, if the candlesticks, their bodies are black, because currently my setting is black and white, okay? Black means bullish candle, okay? Black means bullish candle. Please, you have to stick to this rule, okay? Very strictly. All right, so if the candle whole body is black, for example, like here, okay, let me just zoom in so everyone can see. I'm going to put this yellow vertical line just on all of my bullish candles just to show you what this whole idea is, okay? I'm not going to put it here, okay? I'll explain the reason. I'm going to move it over. And right here, right. You went away. Done. Okay, so this is my example, okay? Basically, any of these locations on my bullish candlesticks, okay, where I've actually put down this vertical yellow line are our potential for entering of a buy order, okay? All right, this is very important, okay? Now, see, we already introduced two rules, right? First thing first, you have to figure out the main direction of the trend. Right now it's bullish. So now when you know it's bullish, you want to now take a look at the top band only, okay? So the introduction of the second rule is that within my top band, if I have a bullish candle, then I can do my buy entry. Okay? Great. I'm sure you guys are super smart, so then you already wrote this down on your notes. So now, how do I actually pick and choose when I should enter? Well, super simple, okay? The top bands is what we're looking at, okay? We're looking at anything in between my top band of the deviation 1, which is the pink one or magenta right here, okay? Prices must be above my magenta, the top Bollinger line. And the prices have to be below my top Bollinger band for the green, which is the deviation 2.0, okay? So if the prices are between this location, which is on my top bands of the Bollinger, okay, then what you can do is enter with a bullish candle into a buy, okay? Now, is this accurate 100% of the time? Of course not. There's no strategy that's going to be 100% foolproof, okay? But what we're trying to do here is to cash in on the idea that we can have more accurate entry points. That's all we're trying to do, right? Okay, so now what we will do right now as an example, okay, is to show you in any of these locations of the yellow vertical line, we could have entered into a buy. Now, how do I actually exit my buy order? Well, there's multiple exit strategies, right? Okay, so you can either set up a rule for yourself, okay, which is when the price actually, okay, goes below my Bollinger band, okay, then I will exit. So for example, if I actually entered at this moment a buy order, then what happens is this. I will actually keep my orders opened all the way until, let's say, the price exceeds my Bollinger bands, okay, which is the top bands, and then it actually comes back all the way down to this potential location. I may not exit now, okay, but then what will happen is that I will actually take a look at, oh my goodness, is the whole body outside of my bands now? Okay, if the whole body is outside of the band, which is on the top, should I say the top Bollinger bands, then I will actually place my exit. Okay, so technically speaking, if we were entered over here and I exit right here, I would have made, let's say, 12 pips of profit. Okay, all right. Now, that is one simple exit strategy. A secondary simple exit strategy is that you set up basically your target for your profits, okay? I mean, we'll talk a lot more about that in the future, about how to exit, okay? I'm giving you basically the more popular ones now. So you can set up a target. So for example, I will want to make 5 pips on every single order. Done, okay? So for example, I will actually want to make 5 pips. I don't care how far this goes up north, okay? As long as I make 5 pips, then I'm exiting, okay? But if it goes south, meaning let's say the price actually goes below my Bollinger bands and touches my neutral line, which is the middle line of the Bollinger band, okay, then that's a risky move, meaning maybe there could be a change in direction. So then therefore I'll exit whenever the price hits my middle line right here on the Bollinger line, okay? The Bollinger band, sorry, my middle MA line. Got it? Okay, so these are 2 simple exit strategies that I have to show you. But anyways, see which one is best for you. Right here, we're going to talk about the entry only for now. I will show you the exits later, okay? But right now, I've already fast-tracked and told you guys the potential exits. Okay, so this is basically the examples of, let's say, how to place a buy, okay, once you figure out your trend. So let's change up the currency. Let's say maybe USD CHF, okay, a major currency. Great. So, for example, right over here, okay, we notice that potentially this is, ooh, it ain't good. My drawing ain't good. Great. Bear with me. I'm trying to work my mouse. It's not being very obedient. Great. Cool. So you see over here, this is what we noticed, a bearish market, right? So in this bearish market, once we figured out the direction, what our entry points are to aim for is to actually trade on the trend, okay? Because most of the time the market is very trendy. So what you want to do is you want to actually place a sell, okay? But sell where? Here, I will show you some locations for sells that are the best locations. Then I'll show you the places that we got fooled, okay? So, for example, some best locations would be here. Okay, this one. Done. Okay. All right. So, where I have actually jotted, oh, sorry. Oh my goodness. This is incorrect. I hope I'm not getting colorblind. You can't get colorblind with basically shades, which is black and white. So anyways, okay, so now the rule of thumb here is once you figured out the trend direction, okay, let's say if it's a bearish trend, so please, now this is the opposite of what we talked about earlier, okay? So if it's a bearish trend, figure out the trend first, it's bearish, okay? Then what you want to try to focus on are in which color candles, which is the white ones in my case right now. These are called bearer candles, okay? Now, where will we want to enter into a sell, okay? We want to enter into a sell when the prices are between my very last, which is the very bottom Bollinger Band, okay, and the very bottom of my magenta Bollinger Band, which is the deviation 1.0. The lowest bands, okay, if the prices are in between my lowest bands area, then I enter with my bear candles in a sell, okay? Now, if you're going to say, should I enter with multiple sells? Well, personally speaking, I'm not a big fan of placing an order all the time, okay? But if we're going to stick with, let's say, an hourly, then I don't see any backdrop to this, okay? So anyways, there's no drawbacks, so by all means go for it, okay? But keep in mind of your available balance. All right, whatever we're providing right here, okay, just make sure that you understand this for educational purposes and entertainment purposes only. We're not providing any signals, okay? So later on, we're going to take a look at the current market now. Now, if you guys want to place anything, please do it on either on a demo or, you know, fully understand the strategy before you dive in and do it on your real account, okay? Because once you open an order, your risk is right there. Got it? Cool. Great. So then the whole idea is to place trades on a sell, on a downtrend, on my white candles, okay? And only when they are in between my lowest Bollinger Bands. Got it? Great. So let's jump into the current. Great. It's a bit laggy. One moment. Great. So, for example, based on my H1 right now, right, what we're seeing is the potential of a bullish market. Okay? Now, this is not a very, very strong bull market, okay, but it's there. Why? Because if I were to drop this down, you guys are going to notice, you see, my highs are getting higher and higher, while my lows are getting higher and higher. So if my highs are getting higher, my lows are getting higher, then that means my potential of a bullish trend is right there. Not the potential, it's currently a bullish trend. So what happens is now we will want to trade based on the trend itself. Okay, we're going to trade by the trend itself. This is Bollinger strategy 1.0. Okay, so for example, should we enter now? A lot of people would say, yeah, of course you should enter now, because then you can actually cash in on a bigger move. But now there's a big problem. There could be, but then what if the market goes all the way down, right? What if? Okay. All right. So anyways, moreover, Bollinger bands, you could take a look at volatility as well. Okay. So for example, like when it pinches together, that means the volatility is actually weaker. Okay. And stuff like that. But we're not going to go there. Okay. We're going to simplify the trading method. All we're doing is trading with the trend itself. So let me drop it down to M15. Let's see if we could actually see a potential trend of anything. Okay, so for example, by M15 we see basically a larger vision of the trend, which is still bullish. Okay, now do we have anything on top of my highest Bollinger bands? No. Okay, so don't go on and start placing trades here based on this strategy. So let's actually change it up. Ooh, okay. Great. You see, now this is quite tricky. You see, the market was bullish, okay? But then now it seems my highs are getting lower. So potentially this is basically a bearish move, okay, in the markets, okay? Now, what you would want to do is, in the case, okay, obviously we're not going to enter into the trades just yet here, okay, because you see the whole candle here that I have this on my measuring tool, okay, you guys see this? Okay, this, okay, the candle is actually currently stuck, not in between, but rather it's coming down from the center, okay, moving average line all the way down. So right now this could not be the best location for my sell, okay, although you see it's already on a sell momentum. Okay, if my next candle is fully opened in between my Bollinger bands, my lower Bollinger bands, then I will place a sell. Okay, so I guess we have to wait like another 30 minutes. Well, let's see if we have potential options over here. Now, just to let you guys know, this strategy is not suitable for every single pair out there. Okay, a lot of the pairs that are much more trendy is what you would want to actually be checking out, okay, this specific strategy. So, you know, let's say like the Japanese yen pairs, okay, the yen pairs are great pairs for this. So let's quickly take a look at the yen, see what we have. Ooh, look, it's the yen pair, technically speaking, is creating a triangle. Okay, you see, the lows are getting higher while my highs are sort of stuck and getting lower. Now this is quite risky. Okay, this is quite risky. So anyways, all in all, the whole idea is that this is trading potentially on a bullish direction. Okay, there's a potential for a bullish move here, okay, based on H1, okay, although the resistance is sort of capped here, you see, okay, so means that a lot of the momentum is a bit, should I say, stuck, okay, so it's going to be sort of in a parallel market for a little bit, but what we want to do is, in the case, right, as we already noticed, the lows are getting higher and higher. So then what we want to do is we will start placing a buy if the prices is a bullish market candle, okay, which is a black candle, in between my top line right here, then we'll enter into a buy, okay? And what we're trying to cash in on is on the fact that we will ride a trend, okay? All right, so now I'm going to show you guys potential fake out signals, right? You see, as we see this is a bullish trend, okay? And then as what we mentioned, if it's a bullish trend, we will place a buy when the market or when the candle is basically in between my Bollinger Bands, right? So for example, here, we place a buy, right? But then look at what happens. The market comes down, touches my middle, so I will have to exit. I lost in this order, okay? So let's say I entered over here on my buy, okay? Then the market came here, I broke even or lost a little bit of money, okay? Now, since we lost, then we have to recalibrate and try to come in again with my second trade, right? So then let's say my first setup was in losses. So let's say we lost $1, okay? Then what will happen is then I'll have to try to recuperate from my next trade. So then in my trade right here, you see, I will place a buy as well here. And, or if I waited a little bit, I wait until here to place my buy, okay? Now I enter into a buy and the market still comes back down. So you see, I just lost basically 2 trades. My first trade, which I did over here, okay? And then my second trade that I did over here, okay? I did my buy orders, which I ended up losing, right? Great. So then now you see, I've lost because during the markets are very parallel, or should I say, when the market is not trendy, okay? We cannot try to catch a trend. Okay, there's no trend to catch. But then you see, if we actually find a market that is super trendy, okay, for example, you see over here, right, the market is super trendy, it comes all the way back down, right? You see, as long as we actually ride the trend in one proper direction, we will not enter a sell here. Why? Because the candle, you see, is not in between my band, okay? What we want to do is we place a sell not over here, because this exceeds the band, okay? There's also risk to that. All right, so what we want is basically enter into a sell right here. If we could cash in on the correct moment, take a look at this. I will enter my sell, and then immediately I'm already making profits. Even though, let's say I may exit, or if I'm gonna hold, because my exit strategy is to make sure that I will only exit when my price reaches my median line of the Bollinger Band, right? So in the case that that is my rules, then you see, we just rode the wave. All of this, we would have profited. Now, we would not profit all the way until here or here, because in reality, I would have exited right here at this moment. So let's take a look. How much profit possibly could have I made? You see, I would have made 200 something pips, okay? So you see, this type of strategy is to ride the trends. So when you're riding the trends, okay, you will actually encounter some fake, should I say, fake entries, or you will be fooled. But you see, if I made 200 pips right here from this trade, then that basically means I could still be fooled at least 200 pips until I don't make any money. You understand? Okay? Now, the markets usually are not always parallel. Okay? So that's why you have a lot of opportunities here, because you're not always just entering blindly. Understood? So anyways, let's try to find if there's a potential entry. Now, remember, everything we do here is purely for educational purposes and entertainment purposes only for you. Okay? All right. Oh, we were looking at AUD USD before, right? Let's take a look. Nope. Euro CAD? Great. Euro CAD, let's quickly take a look. You see, the trend, okay, well, this is also a parallel market per se, right? But then my highs are getting lower and my lows are lower as well, although this is very short-lived, okay? But what I can do is, based on my instructions that I've told you, if I actually entered a few candles earlier, would have been great. So just for simplicity's sake, okay, and also for demonstration purposes, guys, this is not signals, okay? We're providing only educational purposes to demonstrate for you. So we will do 0.04 lots, okay? Just because we have multiple strategies running on this account, therefore we will diversify it based on the lot size we enter. So 0.04 is the Bollinger Band strategy 1.0, okay? Actually, for simplicity's sake, I'm just going to comment on it. So, band 1.0, done, sell, boom, okay? Now, why? Because this candle is basically well, it's sort of reversing on me now. Damn it. This is what happens in Forex. It's exciting. It's always causing you headaches. All right, so what happens is you see my previous candle fully closed, okay, been in between my Bollinger Bands on a downwards trend, okay, and moreover, the whole thing is under my lowest bands and in between with a bear candle. So therefore, I will enter as a sell. And thank goodness right now, apparently it's catching up and breaking even and possibly making profits now. That's great. Okay. All right, let's see if we have a potential second entry potential. This is very unique. You see, the overall direction, this is very trendy, right? But then you see, this caused a triangle. So usually you don't really want to trade in triangles. If anything, you want to make sure that it is actually very trendy, right, in one direction. Now, if we're using basically H4, you see, you can see the trends much better. Ooh, that's great. But you see, the trends are potentially reversing right now, okay, as it's capped. You see? Because it actually broke below, okay? So there's a potential that this could indicate a potential bearish trend, okay? And if it's a bearish trend, then based on my H4, the same idea is going to follow. If the prices are in between this location where my mouse is moving around, and if it's a white candle, then we can place a sell, okay? It's simple as that. Great. Now, let's quickly review our previous strategies, right? Our previous strategies, we had basically, ooh, that's a Bollinger Band. The pivot points. All right, there we are. Our previous strategy is basically calling for just the use of stochastics and RSI, which is to place on D1, okay, for accuracy purposes. Let's quickly take a look. This is gold. Maybe you guys will like it, maybe not. There's a lot of people being fooled by gold, especially last week. Because there's a lot of assumptions that maybe the U.S. are going to be talking about basically lowering the rates, right? But anyways, it seems that has been pushed back. So anyways, take a look. Our whole idea is the fact that as long as the RSI and stochastics create an overbought, then you enter into a sell. So for example, over here, we entered into a sell. Now we have been fooled, okay? So we're stuck in the market with a lot of orders. Okay, and what we talked about before, boom, is that in the case that we have a lot of orders in place, what the heck do we do? Right? We have three options. We basically have one where we just can everything and start anew, okay? Or number two, if we see that the direction is still accurate, then we don't have to can the orders, okay? We can actually place basically the same type of trading strategy, same direction with a potential no increase in lot size. And if you want to increase in lot size, you can recuperate further and faster, but you're exposing your risk. So for example, we did expose our risk, okay? We basically did increase the lot size to 0.2, okay, on gold, just to hold on to the direction. Now, obviously on D1, you don't get fooled that easily. So for our educational purposes, we're going to hold on to the trades currently, okay? The third strategy is to hedge it, okay? Hedging is to limit your exposure. Obviously, we're not hedging it just because the trend direction seems to be pretty prominent, okay? As the stochastic has finally caused a crisscross on its overbought. So the potential of a sell is much stronger than that of last week, okay? So the update is that we're holding on to the orders. All right, and let's see how it goes. All right. So our second strategy that we talked about is basically our pivot points. So let's quickly take a look at the pivot points, right? We utilize the, is that the hour? Let's change the pivot. doing the hourly. Done. Oh, forgot to do that. I think I should just open a new one. Done. Our second strategy that we talked about is basically our pivot points on the hourly pivots. And what do we do, right? Basically, we trade based on when the price is either above or below the pivot, right? So let's say if the price is above the pivot, then we place a buy, right? And then we utilize R1 or R2 as our take profits. And then in the case that the prices are actually below the pivot, then we place a sell, okay? Now, most of the time, this will be actually a great system for gold. So let's quickly take a look at gold together, okay? So, whoa, look at gold. Exciting stuff. Okay, so basically for gold, okay, within this, should I say, 15-minute strategy, you see if we actually placed a sell here and we actually took profit, okay, over here, we would have actually made a small amount of profits at 5 pips, okay? So now, for example, if prices are below, we place a sell, and then we would exit when it touches S1. Okay, now that it's between the pivots, we're not going to do anything. Okay. Usually do this for potential pairs that are more, we're going to do. Done. Okay, you see, you enter, and then you could actually place your take profit right over here. Well, obviously, every broker has a different take profit setting. Okay, maybe this is too close. So I guess we'll have to exit properly. All right, well, that's it pretty much for the review today. Okay, hope you guys actually learned something about my Bollinger Bands today. We will actually have a version of the Bollinger Bands 2.0 next week, where we're going to integrate a secondary indicator to help you guys have a better understanding of potential entry and exits. Thank you very much, guys, for